Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 23rd, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We are here now on a holiday shortened week here due to the Thanksgiving holiday here in the US, and you can see how the market has clearly compressed here heading into this week's trading. The volatility has already dropped. We're on a 10-period average here, and you can see it has compressed over the last 10 periods. Building energy. Overall, what tends to happen here is you tend to see price push higher into the Thanksgiving holiday and beyond it, or just beyond it. And again, we are seeing a bullish response to the PIMA trigger zone. However, price continues to remain below the 3580 key levels. So 3580, 3587 both have been very important here. 3587 the key range top. And so above that level begins to squeeze here to new highs back toward 3668 and beyond. And if there's a rejection or a failure to break out, or it fails on a breakout, that could lead to a lower high, and perhaps we lead lower. So right now we are in a very narrow 3-day range developing. We are narrow 5, 7, 10-day range. It's all compressed here. And overall, again, based on seasonality tendencies, we could likely see a quiet continuation higher, especially if price can get above 3587. Any failure to hold the 35 zone opens up a big test at 3511 in the near-term basis. All right, let's take a look here at the NQ. You'll see with the NQ very similar price action right now. Compression. If you look here on the last 10 days as well, just now coming up with a compression signal there. For the most part, we're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So it's looking at this range from here to here, and it says this is compressed compared to normal. Volatility has clearly dropped, which is what you would expect here heading into this week. And again, price having trouble with overhead resistance at 12K, even as high as the 12-100 level. It hasn't really been able to really finish beyond that zone. If there's a rejection at this area, we could see a retest of 11.8, which is very important, and below 11.8 is the next key level down, which is about 500. So overall, we continue to see a compression right at the apex of this pattern. Really the last 9 days, 1, 2, 3, 4, 5, 6, 7, 8 days actually, we're seeing just super compression here. So we may see further sideways price action with an upward bias unless price fails to hold 11.8. All right, let's take a look now at crude oil. Crude oil right now testing 43s yet again here, putting in a new high. We talked before how the bounce here at 40 here was very nice, and as price was trying to reject 42, it really wasn't pushing downward. Instead, it looked like it wanted to give a go to testing 44s above. 44s are the top of the range here that we haven't seen since August. So this is the last time we got into this zone. We hit 43.78 back August 28th, and so that's about as high as we've gotten. Today we're at 43 and change, 43.38, 36. So right now we're at the top end of this range. And if you look here, we've had a really good trading range that has developed from here down. Sometimes we've gotten below the range and snapped back. Here we are at the top end of the range. Are we going to see price push through 44s and try to make the move to the next market structure above? Or is this going to be a higher high failure here at resistance, and perhaps we rotate back toward 40? So again, right now, continuing to watch 43s, but that will be early signs of rejection. If price cannot reestablish above 43s today, that could open up a swing back to 41.26 and 40 in a very short term, as we stay somewhere between 40 and 43.50. All right, lastly, let's take a look now at gold futures. You'll see with gold futures here that it continues to barely hang on to the 1860 support level. The previous couple of days here, we've tested below it, we've tested at it. That's exactly what we've done before, tested below it, tested at it, and we could see how many times bulls have come in to defend this zone. But as I've mentioned before, You want to know who's positioned where, you want to know where their stops are, and then you want to know if they're getting paid. If those participants are not getting paid, at some point the downside sell stops get triggered here and they are forced to liquidate that position. So right now we seem very, very close to a long liquidation. If price can't hold 1860, there's likely a stop run day that takes you down through 1840, and from there you might see a couple of extra days where 1800 to 1818 are reached. So right now, again, we might be on the verge of something like this, where bulls are coming in to hold, they can't hold it, boom, 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 and then you try to bounce again. So again, 1860 is the level here to watch. Any failure to hold that level could open up 1818 and 1800 below. Above last week's last month's close here, about 1878s, 1879s would open up 1900. But really, that's been the range this entire time. It really needs above 1900 to get higher. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.